Hey, it's Mac with PriceActionTradingSystem.com, and it is Wednesday. It's May 3rd. This will be our chart lesson for the day. And quick look at our daily chart. You can see we did get follow through selling today. This looks really bearish. Honestly, for the most part, this was somewhat of a range type day with prices up and down. And then we sold off late after the FOMC announcement came out. So um, you see we closed right on the lows here of that support line. So we'll see if we get more follow through tomorrow. Um, we're probably overdue to at least come back. Actually, we've already gone through the midline here, so we're underneath on the lower half of the bands now. So we'll see what tomorrow brings. Um, but we definitely got some follow through today. Again, it doesn't look quite this bearish on the daily chart because most of the day was sideways and um, really mixed until after about 1 o'clock. Then once the news came out and they raised the rates another quarter point, I guess the market saw that negative and continued to sell off for the rest of the day. We had a pretty good little move down right near the close that dropped the market probably another 20 or 25 points. So that didn't help things either. So ended on a pretty negative. I mean, we closed at the very lows here. So anyway, let's flip over to the intraday chart, 2000 tick, and we'll take a look at it. We'll go through the trades. Quite a few trades today. Um, but let's flip over there and take a look. And this is how I saw it today. And you can see once we broke lower, a measured move, but you probably would have wanted, this is how I had it early on, you probably would have wanted to adjust this to more like so. I think you get the most touches across here, maybe like that. Uh, maybe even just slightly lower than that, where it maybe even touches that one. And you can see that gives you pretty much a measured move down. Uh, I would say the sell-off really started here, and they tried to fail those breakouts and couldn't, and we went down and went a perfect measured move basically. So that's how I saw it. I'm going to move this back to here for now because that's how I would have played it early on, and then we'll kind of adjust it as we move on out. But let's there it is. You can see it, but let's zoom in and go through the trades and wrap this day up. There's quite a bit of news. Of course, the FOMC is the big one. On that one, I'd be flat by noon, 12:15 the latest. I just think that's the smart move. Um, there was also a 7:15 news item. There was also a 9 a.m. news item. And then, of course, you can see the 1 o'clock. And then, of course, there was a 1:30 press conference, but usually the damage is already done, or whatever's going to happen's already happened by that time, and the market just kind of continues on. But you can see here the 1 o'clock news is right in here. And of course, I suggest you be out by noon. And of course, 1:30 came here and we had another sell off and then rally. And so it didn't really change much. Just gave us a lot of volatility, and then finally prices kept chopping sideways and slowly moved lower. And so there it is. But let's take a look at what we've got here. Again, early on we had almost two perfect measured legs up off of this range. We had a leg up, went into the range, and then we had that little failed breakout and made another pretty much measured leg up. 7 o'clock came right in here. Again, I would be flat 15 minutes till or whatever. Actually, 7:15 was this news, so I'd probably just wait till this news is over before I started trading. And I just don't see anything. This is just too congested and too tight. We did break out here. Maybe you take this trade. I marked it green, but that's a perfect measured leg up there for the most part. And you can see we had this overshoot and we're way away from the EMA. Generally, you're better off to wait on the lower high, which came here, and it looks real congested then, so I wouldn't take that. But maybe you take that trade. I mean, I wouldn't be afraid to take that trade. It's a little risky. You got to, generally you want to wait for more proof that we're going lower. But I like that trade just for a quick scalp, trying to ride it back to the EMA. And that's probably all you get out of it as well. So And this is all just too sideways and choppy. And we just kind of keep chopping lower. And then finally you get a new low and you get a first entry, second entry, and that confirms that trend line. Big bearish bar. I like going short there. And your hope is we're headed to this other side. And again, we get another overshoot right here. And then we get about 3 legs up. And so we're making multiple legs higher. And with this still in this channel, you can't take that trade. Wait for a lower high or second entry, and you actually get a second entry here, but the signal bar is no good, and so there's just no real good chance to get in here. And even though we're moving lower, even this is just a first entry, but that's the first break of this green. I mean, this is it looked like we had a break in a new low, and then we start moving lower again. So draw your next channel because we could keep going lower. And we get a break here, so I would expect prices to test this low again. And of course, you get a first entry, and then right here you get a second entry short. Nice bearish bar. And if you're not certain at that point, when we get this failed second entry long or another lower high with another nice bar, definitely jump in by then. You could trade either one of those. And of course, then we kind of bounce. We do get a little failed break lower. I don't see a good opportunity to go long. This is real tempting, but I'd wait on the higher low. Then you get one here, but it's closing outside, and the resistance is looking like, or the support's looking like resistance. So I'm a little wary of that one as well. I will note that move gets exactly 6 ticks, which is exactly what you need, and there's a good reason we go for a 4-tick scalp, because consistently you can get that, and right there you technically, if you're going to go long with a buy stop and you're going to exit with a limit order, to be sure you get 4 ticks, you need 6 ticks, and that gets exactly 6 ticks. So I mean, I didn't mark it, but it's one you could take, and you can see it gets exactly what you need. And by this time it's too congested, so I don't like entering there. This is just a first entry. This is a perfect reversal here, so we do end up getting a reversal pattern. But notice the new low, first entry, second entry, and then it bounces, closes just above the EMA. I'd go long there. And then you get another failure here, and you get a second entry long. It's a little bit congested. You're going long close to the highs. But if this is a range day, we're probably going higher. And you may not even could get in this trade because it gaps over and just keeps going. I like that setup. If you could get in it, take it. And then, of course, you come back again here and bounce. And then you get an almost perfect repeat pattern exactly like this. The first move's a little bigger, but that's what you call a repeat pattern right there. And another second entry. Take that one by all means, just because it's a repeat pattern. This one you can get in. And then that takes us into the noon hour. And, you know, I'd be real careful getting, I mean, as you see, there's no volume, no movement, not much of anything here. Just a lot of little sideways stuff until the news, and then it goes haywire. And it's probably settled down about right here. You've already had a break in new low, and then all of a sudden you get another leg down, and then finally you bounce. But I don't see anything I really like here going long or short. This is a retest of the high on this, and we didn't quite make it. You could draw this trend channel. I usually don't draw them on the retest, but you could draw this, and you can see we get a close outside new high, and it turns down. That's tempting to take, but we don't quite have a new high, so it could move higher again. And then by the time you get this lower high inside the range, it's moved too far to really consider that as a lower high. I mean, that one's really tempting right there to go short, but it's just a first entry, and it's like I said, it's moved too far to be a lower high. And of course, you get a perfect measured leg down, and then one more push lower before it bounces here you don't get a chance to get. That's what you call rejection off the lows. Look how that there's no hanging around. It just reverses and goes. That's rejection. That's what you want to see. But unfortunately, you don't get a signal bar there, and it just rockets straight up. And then we're right into the highs again. And you might have moved this up by now, as I said. I mean, at this point, the highs are probably more like right here. I think that's where I wanted to drop it earlier. But this thing just rockets up. And when you come back, you get this lower high right at the support resistance. It actually breaks higher and turns down. I don't know if I would go short way down here. If it breaks lower, maybe, but you may trade that on the engulfing bar just to try to get a scalp and a little better entry. So maybe you catch a runner here. It runs down, and then you get a first entry and then another second entry short right there. I like going short on that second entry. You could also, actually, no, I'll take that back. Just skip that. It's just a second entry short. I was about to say this was a reversal, but it wasn't. It's another pattern over here somewhere else. But anyway, it takes off. And then we're just chopping lower here, and these are all first entries and nothing, I mean, not great, not even a great signal bar. And then of course it bounces at the lows, and you try to go short once, twice. So when it breaks higher, it's a failure, but it's also a new high there, first entry, second entry. So I like that one. It's a little congested. It's right in the middle of the range, but we've been clearly going from highs to lows. So this is close to being blue, but I'm still going to call it green. So however you wanted to do, if you wanted to take that trade, I probably wouldn't beat you up for it. But it could fail on you. And you see now we run to a new high and it just turns down. And that's clearly a break and a move to a new high. And look how far we are away from the EMA. Maybe you take that trade. I marked it green. It's a little aggressive. You're better off to wait on the second entry. And you actually make a new low here, so this is not a second entry when it breaks lower. But if I remember right, let me move this. No, it doesn't break lower there. I was thinking maybe it broke lower right there. I couldn't remember, but no, it does not. So it's not a second entry of any kind. It's just a first entry short, and then we're running higher again. And there's no reason to go long there either. And then no reason to really go short up here, but then it breaks higher and fails and turns down. This is another repeat pattern similar to this. It's similar to this one, but there was another one over here almost just like it somewhere. So maybe you take that trade. We've been running from the high to the low, so we'll probably run to the lows again. And actually, if you took it this time, you probably catch a good runner here because it just keeps going lower. And this is clearly two legs back. I look at it like two legs. Even though you made a little lower low here, it still looks like two legs back. The market still looks weak. I like going short there. And then, of course, we make a new low and bounce, and you get a first entry, and there's a second entry right there. You do have a close outside that green channel and a new high, but I'm a little bit wary of that one, because it could bounce off that EMA and make it head higher again. But when it turns up and fails and turns down and gives you a lower high after that second entry with that trap right there, you could trade that on the engulfing. I'd probably wait for that to close and put my sell stop. And if it breaks, you're going to retest that low and probably make a new one. And of course, look at it go, boom. And then of course it rallies. I don't think you want to try to buy this. Never try to catch a falling knife. You just hurt yourself, and just think of it like that. Even though that's a great move up, it's not worth it. And of course, you get your close outside new high, and then you get another lower high right here. It's almost a perfect repeat pattern of that. We got several of these repeat patterns today. So once here, you might even go on the engulfing bar because you just saw it right here. But look how that closes. Just go short there if you don't. There's another easy move right into the 230 hour, and then the volume just kind of dried up as everything just kind of petered out there. So, but there it is. mostly sideways, and then when we did break lower, it was almost a nice, perfect measured move. It was a nice measured move for the most part. Um, but yeah, we spent most of the day just working sideways here. This was a range day until we broke lower here and made that measured move down. And still, I think you would call this a range day. And this was just a midline, and we spent most of the day in the upper half, and then in the afternoon we traded down to the lower half of it. So that's how I see it. That's how I played it today. You got to be careful on these. This range got wide enough later on that you could trade the trends, but generally you try to, when it's consistently bouncing off the lows, you want to buy those lows on a good setup, and if it's consistently turning down off the highs, you want to sell those highs on any good setup. Now it has to be a good setup. You don't just buy blindly or sell blindly or whatever. But I tend to like these days when they're consistent because it's like it's easy money. Now, when you have these days where the highs here and the lows here and the highs here and the lows here and the highs way up here and the lows, when you have those days, ranges are hard. On that very mixed trading where there's no consistent support or no consistent resistance, those trading days are hard. But when you consistently kind of bounce at the same places and you're doing it way away from the EMA, trying to trade it back towards the EMA, those are almost gimmies on when there's a good setup. So I like those kind of days personally, and I know new traders struggle with them because it's so hard to see this market dropping like that and then to buy and go with it. But just study your charts and see what happens. You'll see it happen over and over and over. So you have to get used to it. You have to understand how prices move, and you have to be able to trust your read on it and your experience with it and go with it. So that's why we study our charts. That's why we sim trade. We prove to ourselves this stuff works before we try to trade it live. And then we get confidence because we see it work. And the more experience and the more confidence you get, the better your trading gets. So you got to keep working on it, and you have to trust the process. You have to trust the strategy, and just go with it. So, but that's why we don't try to do this learning live, because we don't have deep enough pockets. The average retail trader does not have deep enough pockets to trade live while you learn. You will go broke. The smart, skilled traders will take your money every single time. You might even have some little pieces of success, but in the long run, you're going to make a mistake and they're going to get your money. So don't do it. Trade, practice on the simulator until you prove you can. My rule has always been start with $10,000 sim account and trade that account exactly like you're going to trade when you go live. If you're going to go live and you can only afford 3 contracts, then don't trade it with 10 or 20 and say, okay, well, I doubled my account, because you're just fooling yourself. And if you doubled down and did crazy things and you somehow survived and you reach your goal, you can't do that live, because you couldn't do that with your small account trading live. So again, you would just be fooling yourself. So when I tell you, or say trade until you double a 10K account, I mean trading exactly like you could trade if you trade live. I don't mean going in there and doing all these crazy things and taking all these wild chances that you couldn't take with a live account and then doubling an account, because you're just fooling yourself. Because then you're going to go live and you can't do all those things, you're going to lose your money. So you got to not only do it, but you have to do it right. You have to follow the rules, and you have to do it exactly like you're going to do it when you go live. If you can only trade one contract when you go live, then you can only just trade that one contract when you're sim trading, and prove you can double that account before you ever try to risk one thin dime of your real money. Because listen, I can tell you what's going to happen if you do it. And you don't have to believe me, but just try it and find out, and then you'll wish you'd listen to me. But they're gonna take your money. And this thing's continuing to sell off. It looks. No, we haven't opened back up. I'm sorry. That was that final little sell off there. But yeah, they're gonna take your money. Now these guys are skilled. They know what they're doing. They're professionals. They've been doing this for years and years and years. And your experience of theirs is like kindergarten to a doctorate degree. They got a doctorate degree and you're in kindergarten. And you're not going to outsmart them. You're not going to outtrade them. You might get lucky occasionally, but in the long run, they're going to take your money. Don't let it happen to you. Anyway, I'm going to wrap it up. We'll be back again to do it tomorrow. Believe it or not, tomorrow's Thursday. We'll wrap up our week. I'm feeling better. I'm kind of getting back to normal. I'll have another surgery on my ear, my second surgery in about 2 more weeks, and then after that, I'm off to. I have it. Unfortunately, I have my surgery 2 days before my trip to Alaska. The doctor says it shouldn't affect me, and I should be fine. And I asked him if it was going to hurt like the first one did. He says no. So I hope he's not pulling my leg and just telling me that. Um, but anyway, 2 days after that surgery, I'm getting on a plane and heading to Seattle and getting on a ship and taking a week-long cruise up to Alaska. So I'm going to get a vacation there in time to heal up, even if I don't, even if I am hurting. So I guess I can hurt on vacation as easy as I can hurt at home. But that first surgery, I'll just be honest with you, if you've never had it done, which most people probably hadn't, it's kind of a unique surgery, but it was painful. He said some people are worse than others, but it was painful for me, very painful. And I have a very high threshold for pain. I usually don't take painkillers of any kind, but I had to take them on this thing. I had to take a couple a day for a few days. It really took about 5 days before the pain subsided enough that I felt normal again, or semi-normal. Because even right now I don't feel normal because it's there and it's my ears sewed to the side of my head, and I got issues with it, so it's not healed up, so it's there. But anyway, I'm gonna wrap it up. I'm just talking here, but I'm gonna wrap it up. We'll be back again to do it tomorrow. We'll wrap up our week tomorrow. Hope you had a good trading day. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.